all the latest market news, the currency market, and all the conflicts or news that may affect the currency market, commented as always by Gonzalo Cañete. How are you, Gonzalo?
Good afternoon. How are you?
We are great. We always love to connect with you. That London-Madrid connection. And we have to start by talking a little bit about everything that happened last week, which was one of the most convulsive weeks. And we were partying. We were also partying half the world. But then they had the NFP. There was a lot of data that moved the dollar index. As the dollar index moves, so does the rest of the market. They knocked it down. They even lowered it in a volatility wick to those $2. Then we commented. Then we commented. The rest of the currencies also, to what extent it affects them, because I think we are also going to comment on the pound, which this week is going to be the protagonist of the currency market, of the forex market, and we are going to see how it has been. And well, let's see how all this has turned out. Have the waters calmed down for the dollar? Or are there still threats on the horizon of volatility as beastly as that of the NFPs?
Well, I think that Powell is making a circle and the dwarfs are growing, right? As they say, because what we see is that if we had data, for example, that were moving him away from, well, he finally took a concrete position, Jerome Powell, the Federal Reserve, of not cutting rates, of admitting that inflation, it was moving sideways in zigzag. We have repeated it 1,000 times since December when he suggested cutting rates. We have repeated it in this program. That is, it is not credible because inflation has not disappeared and it is moving in zigzag. And because the underlying factors are practically on the services side, because wages are not falling, because labor costs are still high. We had the key reasons why we insisted that Jerome Powell, the Fed, could not cut rates. And when he finally admits it, that's when...
Are lying, and they have found out by lying, because look, we are at the 8th day of May, so...
The issue is that by the time they admit it and say, no, okay, inflation is not slowing down as we expected, and therefore, for the time being, interest rates are going to stay as they were. That is when macro data that would justify the rate cut start to pour in. We had, to begin with, the data that was an indication, for example, in favor of this rate cut. It was a slower growth rate than expected. Well, then they released 1.6 of growth when 2 and a bit was foreseen. And the employment report we had last Friday, the same weaker than expected data in the labor market sector. Therefore, another factor that would justify a rate cut. So I am imagining, of course...
Was what you were commenting on, that ironically a weak labor market was going to favor the...
Of course. And just that last Friday, we saw that it was, in fact, you notice that all the bull market that we have seen since end of last year started in November with a bad employment report. And I have told, but so that people do not forget, okay, I am very insistent, but so that people do not forget, when the bad employment report of November 2023 came out, Cascaris from the Federal Reserve even said a comment, nothing 1 hour, 2 hours after the data. He said something that simplified would be like, don't get excited yet. It's just an employment report. We may see the next one. We will have to confirm if they are still bad data. That is that they were excited because the employment reports were bad and therefore the rate cut would be justified or he would leave it alone. The main problem they had in order to recall rates is that inflation is based on labor cost. If there is no unemployment, labor cost is high. If the unemployment rate rises, labor cost tends to plummet. Therefore, they can recall rates without fearing that inflation will become persistent. And now this data finally comes out. Just when they have said that they are not going to cut rates, this data comes out and the adjustment of both the dollar and the 2-year bond, which is another of the most accurate indicators we have seen of interest rates in the United States, was a plunge in bond yields, a cooling or weakening of the dollar with all the rally it had been having, a dollar that had a very strong momentum, and turned around with the negative employment data and therefore the stock exchanges. The Standard & Poor's, NASDAQ at 18,000 points. The party continues thanks to bad macro data, and as I say, Powell at home probably thinks, when I finally decide to tell them, come on, well, we are not cutting rates because inflation is very dangerous, and is not responding just then to the variables that he hoped would justify the rate cut.
Stock markets, that is a melon that we would have to open another day. The melon of expectations, both in data and in corporate results. how they are raised or lowered according to the taste and interest of what is going to come out. We are going to open another day. The topic of expectations and then the actual data. However, even though the indexes are once again very upbeat, there is still the possibility of failure after those highs. There has been a strong bearish attack. It is normal for them to have this rebound, but if they leave that failure here, that declining maximum, we can have a sign to be able to retake short positions. That could then break those supports that have already been attacked a couple of times. Of course, the dilation that it left on the dollar index is still above the 104. Those 104, that is support, and that before was resistance that we have been carrying. Been talking about as resistance all this time. And it has overcome it with strength, and now it should consolidate. So this is still a breath of fresh air, and we will see in the following data where the air is blowing, because there is still a lot of year left. There is still the whole summer. We know that in summer there are also movements there.
Less liquidity, and therefore
the party lights on, or who is going to be the last one to turn off the party lights and tell the dancers to get out, that the party is over here. So oil is also linked to currencies such as the Canadian dollar, for example, as for example, the Canadian dollar. So if there is any relevant movement for the next weeks, we will include it in your space, Gonzalo. It is always a pleasure to connect with you and comment all the Forex market news. And comment on all the news of the Forex market.
To you for counting on me.
All the best.
All the best, Alba.